If you bought a laptop, a camera, a desk, or any equipment for your freelance business, listen up. There is a massive tax break that just came back and most freelancers have no idea it exists. 100% bonus depreciation is back, and it is now permanent. This means you can deduct the entire cost of your business equipment in the year you buy it, instead of spreading that deduction over 5 to 7 years. Note, this information applies to US-based freelancers and self-employed individuals. Welcome to the Freelancer's Wealth Blueprint. Let me show you exactly how this works and how much it can save you. First, what is bonus depreciation? When you buy equipment for your business, the IRS normally makes you deduct the cost gradually over several years. A $20,500 laptop would be deducted over 5 years. A $500 standing desk over 7 years. The gradual deduction is called depreciation. Bonus depreciation lets you skip all of that and deduct the full cost in year 1. Here is what happened. Under the Tax Cuts and Jobs Act in 2017, businesses got 100% bonus depreciation. But it started phasing out. In 2023, it dropped to 80%. In 2024, 60%. By early 2025, it was down to just 40%. And it was heading to zero by 2027. Then, the One Big Beautiful Bill Act changed everything. It permanently restored 100% bonus depreciation for property acquired on or after January 20th, 2025. No phase down. No expiration date. It is here to stay. Now here is the critical detail. The date you acquired your equipment matters enormously. If you bought or signed a binding contract for equipment before January 20th, 2025, you are stuck with the old 40% rate for 2025. But if you bought that same equipment on or after January 20th, 2025, you get the full 100% deduction. That one-day difference could mean thousands of dollars. So what equipment qualifies? Almost everything a freelancer buys for their business. Laptops and computers, cameras and lenses, monitors, microphones, and lighting equipment. Office furniture like desks and chairs, printers and scanners, smartphones used for business, and even off-the-shelf software. Here is a real example. Let's say you are a graphic designer and you bought a $2,500 MacBook Pro, an $800 4K monitor, and a $400 drawing tablet after January 20th, 2025. That is $3,700 in equipment. Without bonus depreciation, you would deduct roughly $740 per year over 5 years. With 100% bonus depreciation, you deduct all $3,700 in year 1. If you are in the 22% tax bracket plus pay 15.3% in self-employment tax, that $3,700 deduction saves you roughly $1,380 in taxes this year instead of $276. And here is something most freelancers do not know. Used equipment qualifies too. Since 2018, bonus depreciation applies to both new and used property, as long as it is new to you and you did not buy it from a family member. So that refurbished camera or second-hand monitor still qualifies. Now, before you depreciate everything, there is an even simpler option for smaller purchases. The IRS has something called the de minimis safe harbor. If an item costs $2,500 or less, you can simply expense it as a business cost without filing any depreciation forms at all. A $200 ring light, a $90 microphone, a $500 office chair, just deduct it directly on your Schedule C. But for items over $2,500, that is where bonus depreciation really shines. You will use Form 4562 to claim it, and the total flows to your Schedule C, line 13. Now let me explain the difference between bonus depreciation and Section 179, because freelancers confuse these all the time. Both let you deduct the full cost of equipment in year 1. But there is one huge difference. Section 179 cannot create a business loss. If your freelance business earned $30,000 in profit and you bought $50,000 in equipment, Section 179 only lets you deduct $30,000. Bonus depreciation has no income limit. you could deduct the entire $50,000, creating a $20,000 net operating loss you can carry forward to reduce future taxes. For most freelancers, bonus depreciation is the better choice when you have a high expense year with lower income. There are a few rules to keep in mind. First, you need to use the equipment for business. If you use your laptop 70% for business and 30% for personal use, you can only deduct 70% of the cost. Track your business use percentage. Second, vehicles have special limits. Even with bonus depreciation, passenger cars are capped at $20,200 in the first year. Heavy vehicles over 6,000 pounds like full-size trucks and SUVs are not subject to this cap and can qualify for the full deduction. Third, watch out for state taxes. Many states, including California, do not conform to federal bonus depreciation. You may need to add back the deduction on your state return. Check your state's rules. Here is your action plan. Step 1. Gather receipts for every piece of equipment you bought for your freelance business in 2025. Step 2. Note the purchase date. Anything on or after January 20th, 2025 qualifies for 100%. Step 3. Determine your business use percentage for each item. Step 4. For items $2,500 or less, use the de minimis safe harbor. For items over $20,500, claim bonus depreciation on Form 4562. Step 5. Make sure your tax software handles Form 4562. TurboTax, Self-Employed, Free Tax USA, H&R Block, and Tax Act all support it. The bottom line is this: every freelancer buys equipment. Very few freelancers take the full deduction they are entitled to. With 100% bonus depreciation now permanent, you can write off your laptop, your camera, your desk, and every other business tool in the year you buy it. Stop leaving money on the table. If you want to learn more about deductions you might be missing, check out our video on the top 10 tax deductions for freelancers. Link in description. This video is for educational purposes only and does not constitute tax or financial advice. Consult a qualified professional for your specific situation. See you in the next one.